Here in just a moment, we're going to check in with Todd Horwitz with Bubba Trading, and I want to run through the futures here first to give us a platform to work off of. First of all, over here in the corn market, 6 to 7 pennies higher over that last half hour, 7 1/4 higher right now in the March. December up 3 1/4, 3.80 1/4. That 3.80 on that December contract, that new crop, was kind of a level that we were hoping to hold above. We did break below that, but we are finally back at that level now, and we'll see if it holds. Let's look at the soybean market. It's higher today, too, by 10 cents on the May. You go out to September, we're 9 3/4 cents higher, 9.14. Not the case for Chicago. Wheat down 6 3/4 for the March, and the July down 7 cents at 5.19 1/4. I want to look at crude oil also. We started out with a little over $1 strength here this morning, and we are recovering to the point of $2.10 a barrel right now at 46.86 after going all the way down to 43.32 on that April contract. May 204 higher. That is at 46.98. And Todd Horwitz is here to talk about all this. You know, Todd, you said something about going back down to the 40s. We certainly did. Now it seems like we're bouncing off the bottom here, but a lot of these other markets as well. One of the things also that you talked about early on this morning was patience and just kind of a plan here today when markets get volatile and start swinging like this. What do you mean by that?
Good morning, John. Well, I think you got to understand how the markets are working right now. And right now, it's just pure craziness and lots of very high volatility. The price movement is and every product basically is moving around in lumps. So if you're trying to day trade or trading during the day, you've got to be patient, and you can't try to sneak in. You've got to wait and commit to a trade and give it enough room to work. Otherwise, you're going to get stopped out every single time. So you got to be very careful here if you're going to be active. Now, if you're going to be passive, you still have to watch the market and understand where, if you're on the wrong side right now, where would your exit be? And that's what I always work with everybody on, is to know where you're getting out. Now, as far as the rest, you know, from my eyes, you know, crude was down much lower overnight. I think it just bounced a little bit here. And again, I expected a bounce. I think the key action is what happens from here. And I think it's still going lower. I think it's going even farther into the 40s, maybe get to 40 before it maybe turns around. I think that's the way it looks here. But you got to be very careful in these extreme volatile conditions, because we call these rip your face off rallies. And again, I think it's probably a false rally. But at the end of the day, you got to be careful just in case.
You know, Todd, there's been a lot of talk about these false rallies and how this can kind of pop up. There's still quite a bit of fear under the surface of all of these markets, isn't there?
Well, there should be, John. You know, look, you get these rallies because the markets go so far and everybody gets on the wrong side because many chase the markets both up and down. So when you get so far down, you're going to get, they call it a dead cat bounce. We saw it start Friday, but last night we opened down 800 before charging forward, selling off again. Now we're making new highs. So you have to be very careful, and this is not for the timid, nor is it for someone who's not experienced in trading in these kind of markets, because we don't get to see this volatility that often. So you have to be very careful, because a lot of these moves are going to turn out to be false later.
Okay, and if you're an end user in some of these grains, is same thing here, patience and perseverance here, you know, because there's got to be opportunities here for no matter what side of the trade you're on.
Well, yeah, and I think that, look, grains, if you're an owner, you need to be hedged. And then you don't have to worry and suffer through these down moves, and you still get the benefit from these big up moves. Now, again, corn, we're short grains across the board at the moment. Right now, even with them higher. Now, if they hold, then we'll probably reverse. But again, we've seen this movie. They run them up, and then they take it back lower than they were before. That's the very key here, and you can see what's happening in wheat. Wheat made the big move, and now wheat's at if it doesn't hold 5.20, it's below it right now. It's probably going back to $5. So again, you got to be very careful at anticipating what's next. You got to be able to see the price action. And the price action right now is a little bit too fast. So I think you want to let it settle. And if we can consolidate a little bit, the higher levels in corn and beans may hold. So I want to see the action before I commit to reversing over. Of course, I'd like to be long, but that's the story.
Okay, Todd, we'll get your thought on the beats here in just a moment. Stay with us. More is coming up straight ahead here on the Market Day Report. Todd, you were talking about that dead cat bounce, which is a market term over here, and Is that what we're seeing in the cattle market right now? Is it following basically in lockstep what's going on with the financial market?
John, I think so. You know, if you look at the overall move this morning, first look I saw fats are up about $2.50 and feeders are up almost $4. Now they've both pulled back significantly. And again, I wrote about this Thursday night saying that I expect to see a bounce just like this. These are not good bounces. These are more either getting out or just a quick short covering. But again, the real key here is they've got to hold back around unchanged if they do come back there. Now, we certainly could start a rally from here, but it usually does not start with a straight spike higher. So very important that they hold, at least break even on the way back down, because again, they're coming down fairly rapidly here, and hopefully they'll be able to sustain, because I'd like to see them go higher, but at the end of the day, they've got to hold these key levels. Otherwise, it's just another false bounce that says, okay, we're still going lower.
Now, you make a good point here. What do you look for when you start to see a real true rally start to form in these markets?
Well, typically even if you see, they call it a V-shaped formation, market goes down, then goes right back up. At some point, it's got to go sideways and consolidate and attract new money without the sellers coming in and be able to push them back down again. So that's the real key that you look for, is the price action when it finally settles. Again, these straight spikes are very tough and typically will fail and reverse back out the other way. Or if they can consolidate, that could lead the way to the next up market, which is what I'm hoping to see, but I don't know if we'll see that or not.
Great insight. Thank you very much, Todd. Have a good afternoon and welcome to a brand new month. The new cutouts are out here at midday, and the beef cutouts are both on the higher, well, unchanged to higher, I guess is what we'll call this, because the choice up 25 cents at $204.75, but the selects steady and unchanged at $201.60. We did move 63 loads on a $3.15 spread, but over in the pork cutouts, those are all higher. Carcasses up $1 at $65.93. The loins up 59. The hams up $2.40. And the belly market at $69.34, up $2.65. On to the live cattle market. Todd talked about these really rocketing higher earlier and pulling back. April live cattle up 77, 108.35. June up $1.10. August up 82. April feeder cattle up 78 at 133.47. May up $1, but the hogs not the case. April's up 13, but May is down 13 and June is down 27, Christina.
Even on that news of a possible ASF vaccine, we're going to have that story coming up as well. Very interesting. Thank you, John. What a day.